Hey, what's up, man? This would be a good video for you guys that are wondering like what we've been up to or what I've been up to over at Bell Capital as we're starting to source more deals. More deals are hitting our desk. So far as underwriting is concerned, new deals are shaking out. And I was like telling a buddy of mine, I was like, San Diego, I still believe San Diego as a county and a city is going to be the next Miami over the next decade, right? There's still so much opportunity here for multifamily real estate, for the quality of assets. And because we're in Southern California, all that money from San Francisco, LA, Orange County, it's always going to trickle down into what I believe is the best city, the number one city in California. So I wanted to go over the different cities that we focus on right now because I was telling them, I was like, there's pockets. Every city is based on location as it relates to investing in multifamily real estate. And you got to know where to go. So I made a couple of markets because we were talking about a couple of cities we look at. So naturally, you have San Diego. Downtown San Diego, still a little rough. So if you get there, the locations matter. And when I say locations, there's like a neighborhood location, and then there's a street location, and then there's a location on that street, right? So if you're going in the middle of a street, right? Because we looked at a property, we looked at an actual portfolio that was a JP Morgan portfolio, and we kind of held off on one of them. Two of them got sold really quickly, and then the last one went. But we didn't like the location of that property. Now, great assets, there's a part where location matters, but it doesn't matter as much because if I can steal a piece of real estate, if I can steal a great asset, a class A piece of real estate at an AA plus irreplaceable location, I will do it. And that was one of them. But as a choice at the moment, I thought it was too soon. So bring that up to say downtown San Diego, a little rough. They're cleaning it up, but they're going to continue to expand there. A lot of high rises, a lot of great assets coming to market. And if you can get in, get in. We are looking to get in downtown San Diego. High rise stuff, it's there. You can pretty much pick up high rise assets for anywhere from 400, 450,000 to 500,000 a door. Yet, if you were to look at those same assets, the ones that are being built right now, they have to be built based on pricing and the timelines for somewhere in around 700 to 900,000 a unit, a door, based on the amenities and the locations and the land and the holding period and putting all these things together. So important for you guys to know. So downtown San Diego is going to be a gold mine if you can time it, right? And timing the market as an investment is a little tough. So, but the next one is going to be North Park. That is a great area. North Park, I think it's called Highland Park, like that whole area of North Park. You got to get there. If you can get in there and buy the right asset at the right time, right location, at scale, you can make it work. There's a lot of older assets there. A lot of people want to go there and the 10, the 20 units, the 8, there's a high concentration of 8 units to 20 units. That's going to happen in an older market like that. But a lot of those buildings are being bought. There's a lot of new construction over there. We took a look at a bigger Class A property that's pretty new. Love that area. Is going to continue to grow. Great occupancy. Great people. It's a great little community. It's a great beach town, and it's very near to the ocean and SDSU and all that other stuff. So the other one is Mission Valley. I love Mission Valley. I like it because SDSU is right there. Same scenario as with North Park because they're in the same little area. What I like, Mission Valley, Mission Bay, all that stuff. If you come down that corridor and you start pushing further out, you're only going to do a couple things. You're going to hit Mission Valley or Mission that corridor, SDSU. You're going to cross over right there. Then you got Fashion Mall. You have all the new assets that are right there. And then, with like Society, which we looked at to Society as an asset to invest in, all the new construction, all the new apartment buildings. Fashion Mall, I think, just got bought and that's going to be renovated and it's going to be brought up to snuff. Beautiful location. And then you start pushing further out, and if you keep on going, you start hitting, SeaWorld, the beach, all that other stuff. So it's just a great location for you to be able to invest money in a deal, to be able to park money 10, 20, 30 years and be able to hold that property for a long period of time as San Diego continues to expand, which is, I know that it's going to do that. And I talked about Mission Valley, plus you got Mission Bay. So next is you have Pacific Beach. Pacific Beach is always going to be a go-to place. People love that area. They love the ocean. They love what it does. If you buy there, if you can get a deal there, get one, period. End of story. If you can invest in a deal there, buy that property, invest in it, never sell it. Just hold it forever. Just anyone who's bought in Pacific Beach, Ocean Beach, North Park, Mission Valley, Mission Bay, all those areas that ever sold probably wishes they would have never sold. It's probably the rents are probably double and triple what you thought they would ever be, and they're continuously climbing up, and you can't get back in once you leave it. It's kind of like why like deals we had. Once you sell a deal there, your key to get back in is not big enough. Period. Even though no matter how much money you made, so never sell those assets. That's my thought on that. Um, and next, Chula Vista. Chula Vista has been on the come up. There's a lot of development there. There's a lot of great activities. That big resort that got built over there is happening. We took a look. We've taken a look at a lot of Class A properties that's come to market over there. A lot of new development. One of the deals we looked at was just recently, a recent deal we looked at over there as well. Very nice, very great. It's beautiful out there. If you can be out there, if you want to be on that side. But my thought process when I look at any investments for Bell Capital is like we need to be scale. We need to get scale there. And you can right now because there's so many new developers that developed, brought properties to market 20, 21, 22, 23, 24, 25 now, and continues to build. They got to exit those deals to keep building. Um, and when I say scale, I'm talking about you got to get to 1,000 units, 2,000 units in that market to be able to keep your efficiencies. If you're like us, where we have a real estate fund, we're looking to put assets into that fund over time, multiple funds, and we need efficiencies to continue to scale the portfolio out to 7,000, 10,000 units, not in that area, but just overall, right? Let's see, what was the other one I have? Carlsbad. I love Carlsbad. My office is in Carlsbad. Um, we're going to continue to scale out of Carlsbad. So it's a tight market. It's coastal. So anything near the ocean, guys, is going to always make money as a real estate. I'm not talking about on the ocean. I'm saying near the ocean. You don't want to be on the ocean because then you got rust. You have a lot of wear and tear on the asset. You got to constantly go back in and do things. And you also have a different group of people that live there. Very different. That's a different customer base or tenant base or resident base that is going to be there. So a lot of times you have beach and ocean restrictions. The closer you get to the water, you want to be by the coast or on the coast by the water, but you don't want to be on the water. Okay, so Carlsbad is like that. Great city. Income is great. It's going to continue to expand. Legoland is there. You got the flowers are there. You have this beautiful community there. You have very, very high-end homes there. And you can continue to expand and grow there, pushing all that way out to Oceanside. I live in Oceanside. I love Oceanside. Oceanside is the last affordable beach town community before you actually leave Oceanside and you start pushing further out to San Clemente. So, like, Oceanside is another market that you should be looking at. Problem with Oceanside is this: they're developing a lot of Class A, great renovations, and they're bringing up to scale the downtown and Oceanside. So you're gonna have an issue with occupancy. Period. End of story. Because the income of Oceanside, which is a retirement community, is not going to be able to keep up with the rents that are going to be required as they start bringing in all these units online. It's just not. If you develop a property down there and your rents have to hit 4, 5, $6,000 a month, you can do that, but you're not always going to be full. And it just is what it is. So those are my little markets that we focus on. I focus on all of these markets, by the way. Like I'll go from Southern California, from San Diego, from the border. I'll look at properties all the way through. I follow the money. If institutions have assets in those areas, I'm gonna go look because I want to buy institutional quality assets and I follow where the money goes. Now, I'm going to push all the way out, which we have been into San Clemente. We've been looking in Irvine. We've been looking in Mission Viejo. We've been looking all the way out to Long Beach. There's assets that we've looked at. We looked at Woodland Hills. So up in LA, I don't like LA County right now because I think LA County, with all of its restrictions and stuff like that and regulations, they're going to be continue to be a problem. So it's a little too soon, and it may be forever like that. But here's what I want to tell you guys: inflation on assets and real estate or assets is not the problem. Regulations are the problem. Regulations are the new inflation. And if you have an asset, you want inflation. It's good for you. It's going to make your property values go up. But you got to also deal with the regulations. So it's kind of like buying a dog. At some point, your dog's going to get fleas. You just need to know that and you need to deal with the fleas. So, anyways, want to go over those. Let's see, there's what, eight? Yeah, eight markets that I love in San Diego. I believe San Diego is going to turn into the next Miami. Everyone's talking about Miami. And there's already a bunch of money flowing in Miami. And there's going to be a time where there's going to be a bunch of money flow right into San Diego. And the opportunity is going to be happening, I would say, within the next, for multifamily, the next 12 to 18 months. That's what we're focused on. We have a real estate fund. We're going to my goal for the real estate fund is to raise over $100 million over the next 12 to 18 months. And for that $100 million to acquire up to $300 million worth of assets. That's just in this next like 12 to 18 months. Then I want to scale that out over the next maybe 3 to 4 years to 4,000, 5,000 doors here in Southern California. That's my goal. And I want to do that with you guys. But these are the markets that I'm focusing on. And I'll do another video later to explain to you guys why. Or you guys can go to bell-capital.com. You can register there and you can see the deals that we look at, that we underwrite, deals we have under review, why we like a deal, why we don't like a deal, why this is a good investment, and why we'll go after those deals or not, and how you can get involved with the process of what it is we're doing. How can you participate in our real estate fund, right? As an investor. So, anyways, I would love to have that conversation with you. I want to show you what we're doing. I think every one of you guys that can invest should invest in multifamily real estate long term for long term appreciation, passive income, and cash flow, and the tax benefits. And you focus on your revenue and your business, keep your main thing the main thing, and then get your money to multiply for you and work as hard for you as you did for it by investing in real estate, right? So, anyways, that means investing with somebody who knows what they're doing. Me. Go to bell-capital.com and register there, or you can schedule a call to talk with us if you have a question about investing. You have an IRA, you have a 401k, you have money sitting in the bank dying, not doing anything for you. Have a conversation with us and see if investing with us would be a fit. All right, so those are the markets. I believe San Diego is on the cuff. I know California real estate is always, I don't care what you say about California as a state. California ain't going anywhere. Period. End of story. It is one of the top 20 states in the United States. It's one of the, in San Diego and LA and San Francisco, Sacramento are still the top 20 cities in the United States, in the nation, in America, period, end of story. That is what's happening. Fourth largest GDP. Like this, if you're going to follow the money, you follow it to California, New York, Florida, Texas sometimes, but this is where it is. It's on the ends. Period. It's on the bookshelf. It's on the bookends. You don't go to the middle. You go to the ends if you're going to invest money and you're going to park money and stay there. That's why I know San Diego is going to be it's going to be the billionaire maker, even though they're going to try to crush the billionaires. You just can't keep good people down, man. Like that's where you're at. And you want to be investing in something that's expanding and growing. California as a state, San Diego as a city. That's where you need to be. All right. Have a great day today. Let's get after it, guys. Boom.